Okay, so how do you actually qualify for a low interest consolidation loan, but you have potentially bad credit? Let's find out. Welcome to the Ascend Finance YouTube channel, where we try to help simplify complex topics like debt consolidation and bad credit into easy to understand terms. Okay, so before I go too far though, just remember this video is purely made for informational purposes only and should not be construed as any kind of legal advice. Okay, so the big question, can you actually qualify for consolidation loans with bad credit? And if so, how do you do it? Here's the deal. If you have any past due payments on your credit report, it may be very challenging to qualify for a consolidation loan. That said, you may be thinking to yourself, then why am I getting all these letters in the mail saying that I pre-qualify for this 5% consolidation loan? Well, let's first talk about what a lender generally looks at when qualifying someone for a loan, and then I'll talk about those letters. And then at the end, I'll finally wrap it up with kind of all your different options if you actually do have bad credit. Okay, so what does a lender look at when qualifying someone for a loan? Of course, this may not encompass everything, but as there could be certain things that an underwriting team looks at differently than other lenders, but here are what most lenders may look at. One, first of all, credit score, right? So they're gonna look at your current credit score and see if it falls within that range of generally when they qualify someone for a loan. Number two, they look at your total utilization. So basically, how much of your credit limit are you using on these credit cards? Is it 100%? Are they maxed out? And then the thing they want to understand is your debt to income ratio. They want to understand, based on how much you make, how much do you owe? And then finally, they generally want to look at the status of your debt accounts. Are they past due? Are they current? As those are going to be very important factors. Okay, so now at least you know some of the main factors. If you feel like you could be a decent candidate for a loan, right? Let's say you have a decent credit score, you are current on everything, you're not gonna fall behind, right? Well then feel free to check out some of the loan options. I put a link in the description below. I think there are often times where you may come across a company who is potentially offering a loan, but then you get offered a program instead, and I'll talk about that more in a bit. So we wanted to link a few lenders that in the description that we know should be reputable and basically soft pulls just to check the rate. But I do encourage you to watch the next part of the video, as I'm gonna actually get into something most people don't really understand. Okay, so something that a lot of people don't realize is that people are getting tons of mailers pre-qualifying them for loans when they have high utilization and a low credit score. Is it maybe to bait and switch people into another option? Let's get into that. So something I am seeing more and more is these pre-qualification loan mailers that are telling people that they qualify for an extremely low interest rate loan. The thing is though, when you call the so-called lender to inquire about this incredible offer, you'll find out they'll burst your bubble pretty quickly and tell you that you sadly don't qualify for the loan.
Thank you for calling. This is Kyla on a recorded line. Who do I have the pleasure of speaking with?
I got a letter in the mail to apply for a loan.
Okay, what's the offer code on it? Hi, I just talked to my supervisor, and unfortunately, since I'm on a recorded line and we're both on recorded lines, I can't move forward with anything right now because it's against company policy.
However, they have the next best thing, a debt relief program. The kind of programs where you stop paying on your debt and then they'll try to settle the debts for less than what's owed. So let me guess what you're thinking. Why would I stop paying on the debt? I was looking for a loan. Well, exactly. I agree. Why would someone sign up for a debt relief program when they were trying to get a loan? Well, maybe because a company bait and switched you into thinking they're the same thing. So what do you do then if you're actually trying to get a loan, but you have bad credit? Here's the deal. If your credit score is under 600 and you have a high utilization, it could be hard to qualify for a loan. And to be honest, even if you qualify for those loans, there's a good chance that the rates on the loans are terrible. Now, that's not to say if you had a cosigner, things could change, but that's assuming you don't. So what are your options then if you're not qualifying for loans, or the loans you're qualifying for are just high interest loans? Well, one option you could look at is, it's called debt management. Now, let me be clear. Debt management is not a debt relief program where you fall behind on the debt. Debt management, also known as nonprofit credit counseling, is where an agency works on your behalf on lowering the interest rates on credit cards. I'm a bit of a visual learner, so let me break it down a bit more. So there are 3 parties involved: yourself, the nonprofit, and the creditors. You're gonna make one monthly payment to the nonprofit. The nonprofit will then make a payment to each of the creditor at this new agreed interest rate and payoff plan. The new agreement with each creditor will generally have a shorter term length, so a much shorter duration on when the debt's being paid off, a much lower interest rate, because that's the whole idea of the plan, and a new monthly payment. So really the whole idea behind this option is that it's still going to consolidate your payments like a loan would, right? So now you only have one payment to make. It will still get you out of debt quicker and cheaper due to the new term length and the interest rates. The thing is though, debt management only really generally works on credit cards. They do work with a few personal loan lenders, but mainly credit card. And you generally have to close the credit accounts you're including in the program. That being said, if you're hoping to get a decent grasp of the monthly payment for debt management or even other options, feel free to take our debt options calculator I linked in the description. It's going to provide a breakdown including the estimated impact to your credit score for each option, the total all-in cost, and an estimated monthly payment for each option. Okay, all that being said, debt management should still impact your credit score far less than a debt relief program where you're falling behind on the debt. So if you're feeling like you're at a point where you're able to make the minimum payments on your credit cards, but you're not feeling like you're really getting anywhere, kind of just like in a hamster wheel almost, and your credit isn't allowing you to qualify for a loan, then debt management could be potentially helpful to consider. Now, one thing to keep in mind with debt management, not every creditor works with these kind of nonprofits. So if you're curious at all if this could be an option for you, feel free to give us a call. You can reach us at 833-272-3631. We're happy to review your creditor mix and help you understand your potential estimated savings from a program like this and go through any other questions you may have. Okay, so what about the other hand though? What if you're actually falling behind on the debt? Well, frankly, if you're at a point where you're gonna have to fall behind on the debt, then a debt consolidation loan may not really solve your current challenges. But more importantly, it could be a sign of high utilization, ultimately making it hard to qualify for a loan. However, since you're falling behind, it's still important to figure out what your options are. So if you're falling behind, it actually could maybe make sense to look at Chapter 7 bankruptcy or the different debt relief programs. But they are both very different options and oftentimes incorrectly explained. So if you're falling behind and not sure what to do, like I mentioned earlier, feel free to take our free debt options calculator. It's linked in the description. It's going to help you understand the cost, credit score impact, and the duration to each option. That way you're able to make the most informed decision. Again, you're also welcome to call us at that 833-272-3631 number. Feel free to ask for me, Justin, and I'd be happy to talk to you specifically. That being said though, I've made videos covering Chapter 7 bankruptcy. So if you want to learn more about that option before taking our calculator, I'll link that in the description below, as well as the debt relief programs and how that all works. Either way, you can call us or take our calculator and we'll explain it to you. But if you want a video, I'll link that in the description as well. All right, I really appreciate you watching this. Thank you so much. I'll add those videos like I mentioned. I hope you have a great day. Take care.